Samir Arora joins us. We've been waiting to hear from him. He's at the perfect place where China is behind him, India is in front of him, right? Singapore. So what is happening in the world, my friend? Somebody is talking about Middle East, somebody is talking about China, somebody is talking about both.
I think we are now going to talk less about China, or at least China in context of relative to India, as if there are only two countries that the world invests in, and one is at the cost of the other. I was saying all along that even if China did well, it is not at the expense of India in a slightly longer, means even 1 week long, forget about 1 month or 2 months, because nobody has only these two investments. Even emerging market funds will have maybe 50% in non-China, non-India, and therefore there is enough money in the rest of the portfolio to take profits from or cut losses from. You can do it from in many other markets. India is one secular story. China was and maybe is a value trade, which somebody may be underweight, overweight, and can add, but it was being viewed as if there's no other source of money. Every other market is up, India is down because China is doing well. That was a bit too much. But fortunately, that part is over. So now we can, if you want to talk, we mean the market can focus on uh, Iran and Israel, or maybe better to talk about US election or something. Every day there'll be a new event, and it won't matter in the end.
So looking for a reason to correct, and the trigger could be China, it could be Middle East, it could be anything in the world, but this correction was overdue.
Correct. So, but it was a good correction, but it was not a mind-blowingly bad correction. So it's okay. It was like at the worst, enemies were down 4%, but now they are down 2%, courtesy yesterday. So it's okay. What's the big deal now?
And what's been your portfolio strategy? Have you changed any orientation of your portfolio based that there are too many moving parts suddenly in the world?
No. In the last 4 5 days, we haven't done any. At least my long short fund, I've done nothing. No extra long, no extra short, nothing. My bet was that this was short-term thing, maybe driven by. First of all, there were two, three things acting together during the same time. The higher STT, the new rules on trading, whatever, on option trading. In addition, this rule about 25,000 crore. If you have a bigger FII, then you have to either cut down your size or have 100% disclosure of end beneficiaries. Plus, this China thing happened together. So, who knows what was exactly responsible uh, for this very aggressive selling that happened. Actually, now we find that even yesterday was good selling. But see, this is what happens. It's not that the amount of buying has to be much more, but the market has to sense that this is irrelevant. And actually, in the end, the number yesterday was still quite big, 5,000 crores. But that was good that the market went up with a 5,000 crore selling, because that is a little better signal to the seller, to the FII, to the trader, hedge fund guy, that this market is going up without you, and therefore you might as well not go.
What is your assessment of the earnings season? The Q1 numbers were not great. Q2, you could blame it on elections, heat wave, variety of factors. Do you think we are in for result disappointment yet again, and that in a sense could be a challenge more than anything else?
But there'll be new reasons. Now it'll be monsoon, it'll be rains. Previously it was summer. So the thing is, the results are not great, but for some companies, they are okay to good. And the sectors that are not good actually are otherwise well. For example, last quarter, although the aggregate numbers were not good, if you took out the oil and gas guys, then it was okay. It was some 13-14% growth, but it visually looked like 5-6% growth because of the big losses in that quarter. Now it might be some other sector, but generally speaking, I think financials will have good results, and IT will have bottoming out kind of results, which means they can say that we see better growth, we see better discretionary growth, we see some BFSI growth, something or the other. And in consumer, the the story that because there is monsoon and therefore the rural economy will do better may be true, but that those stocks have already gone up a lot. So there, I think there'll be more confusion whether to look at the results or look at this prospects of better things to follow, only because these numbers are so low. You grow instead of 4-5% growth, you grow 8%. Who cares? It's more interesting to do this new consumer, the Zomato kind of consumer. At least you grow 20, 30, 40%. That's fun.
Is it time, Samir, to look at some of these new, interesting growth area kind of stocks, or the traditional ones in the sense of, let's say, the PSU bank, pack, which is corrected a bit, or the financials for that matter? Where would you say the tilt should be right now with respect to investing?
So we broadly, when we get new money, we broadly try and find everything. But in the past, and is in recent months, 2-3 months, that money has gone into IT because we never had. I mean, never means for 2 years we did not have, from June 22. And in last quarter, when we became nervous about PSUs and other government related stocks after the election results and budget, and generally no reinforcement in the budget, we sold off a few PSUs, including railway PSUs and a little bit of defense PSUs and all that. And that money then we put it into IT, and therefore today our IT in my offshore fund will be maybe 12, 13 or 13, 14%, which used to be maybe 3% for the previous 2 years. So that is where the last big money has gone. On the margin, you always find something new happening here or there. But in terms of big asset shift, sector shifts, this is where it has happened in the last, say, 2 months, 3 months.
The big sector shift for you has happened with a bit more deployment coming in on IT, but you talked about the confusion in the consumption space, and one of the confusions is regarding the auto sector, because on one hand you have headlines talking about record high inventory, festive sales not being that strong, but on the other, of course, it's one area where everybody's positive about in the medium term, and with the Hyundai IPO, etc. coming in, there's more interest back in that space. What's your take?
I don't think there is any other. There is no bullishness in this story. It is just a story created by the Indian public for what reason I don't know. Because there are 8 or 10 global listed auto companies, and you can see what has happened to them in the last 3 months, 6 months. Every one of them has warned. One of our bigger companies in India is basically 50-60% exposed to the same market. How can it be that 9 out of 9 companies warn? Our company doesn't warn, but says that we will close down the plant because there is too much inventory, but in the long run we are bullish. If nine of those guys in their market are not bullish, why we are bullish about our company? I don't know. Overall, I think that auto is one of the worst sectors to invest in, and I think that this new IPO will most probably on listing will be plus minus par. Let's see.
Okay, and is the view same for even two-wheelers, or do you see some sort of better scenario for at least two-wheelers?
See, two-wheelers is a little bit different. We don't have it, but we are not like aggressively negative in our minds or in our portfolio. Reason being that in actually auto, that is four-wheeler, is actually a global sector. And those companies land up in India also. You can protect and put duties and do hundreds of things. But in your mind, we know that this car, this company product is much worse than another product, although not available in India. But then you don't feel like giving a double, triple, multiple of other companies. In two-wheeler, first of all, the benchmarks are not there. And the cost of this disruption in terms of R&D and all is not as high as in four-wheelers, where there is a global race and the investments are of a much bigger scale than any poor Indian company can handle. If you just type and see what is the EV budget of Volkswagen right now, you can type and see it'll be something like $200 billion over 5 years. So that scale, I don't know where we are playing in that scale other than saying put duty, protect. So therefore, two-wheeler is a bit different and a bit local in that sense. But four-wheeler is a global thing, and we cannot just hide in India or with Indian listings.
Okay, fair enough, Samir. And what's the outlook when it comes to the entire consumption pack? Because we've been talking about this rural recovery that's been expected for ever so long. And then, that sort of a shocker that came in from Dabur, for instance. But when it comes to FMCG, what is going to be the leading factor, or where is it that we're going to see key triggers?
So I don't know, but we think that the consumer is not strong, because if you see the results of DMart or any others, or even the ones which we own, this fast food, whatever. Basically, the thing is that there is no volume growth. I mean, there is, because you set up new store, you set up new branches, things are growing. So that is not good. And in terms of FMCG, and particularly as it relates to rural and range, my feeling is, it's not firm view, but my view is that the basket for the consumer has changed, which means that if you make X amount of more rupees per month because there is a better crop or whatever, or you've got a raise, it's not necessary that that money will now be spent on upgrading your toothpaste or in brushing twice instead of once. It may go into things which are related to data, and it may relate to phone, or it may relate to things which you can put up on Instagram or on social media, or even otherwise in a photograph. This idea that, oh, it rains, so therefore somebody will buy more honey and Chyawanprash, I don't believe all that anymore.
Okay, so don't believe that people will buy more honey or Chyawanprash with the weather changing a bit. But overall, in terms of what's happening to the markets right now within financials, I wanted to get a better sense from you, Samir, because we were just discussing that, of course, PSU banks had run up and there was a case for a bit of a correction there. But within the NBFC vertical as well, the housing finance companies, the microfinancing arm, etc., where within all of this, and gold financiers as well, what would be the pecking order within financials?
So, because we have a lot of banks, so we always have them and we are keeping them. But on the margin, NBFCs, some of them should do well. Obviously, microfinance, nobody's touching right now. And actually, after, I used to own, I used to own Bajaj Finance from 2011. And then we were out for the last 3 years. We even bought that back a little bit. And it looks okay now with 3 years of consolidation, just like the two banks also look okay now. The three big companies didn't do well over the last 3 years in terms of stock price performance, which is HDFC Bank, Kotak Bank, Bajaj Finance, and now all look good to us.
Okay, so they all look good to you. But what about real estate? Is that something which is still something that people should look at positively? Or again, the story has played out in the sense most of these sectors that we are discussing, Samir, the problem is they've run up so much in the last couple of years that it's just difficult to find fresh triggers.
Correct. That's why I was saying the stocks that haven't done well, these three are good. Real estate, if you want to buy something in Mumbai at 2018 prices, I have an apartment to sell you. That's all the big drama. I think in Delhi, at least, I've seen real serious appreciation of real estate. But Mumbai, I can sell you at 2018 prices my apartment, which I want to get rid of. And nobody even comes to see it in a prime place. So the thing is, don't believe all this. I think it's overdone, all this real estate. There was a time because of COVID and other things that people were upgrading. If people don't have money, we are saying that rural will do better than urban. That everybody is saying for whatever reason, which means the discretionary guys, the top of the pyramid guys have had their fill of all these things. Suddenly we say, one say rural will do better, then we want high-end apartments and all to continue to do well without finding new pockets of jobs and new pockets of middle and upper middle kind of income generating jobs, businesses cannot be at this rate.
And Samir, have you taken
And
a
then
look?
we also talk about the return of the investor in real estate. You see, the whole drama was that if investors come, it's the peak. You wanted the end user to have real estate. But now the fact that it gets sold in 2 days without any analysis, it is not end user, because end users don't buy things in 2 days. It's the investor who buys things in 2 days.
Absolutely.
Investor means actually he's trading in a real estate, but for here we call investor as long term. In real estate, the trader is called investor and the investor is called end user.
Okay, that's an interesting observation. Just culling out data for some research later on the show, and I'm actually amazed to see some of the prices that airlines are charging. And no matter what, it still continues to remain a very packed show, at least here, domestic flying, etc. How do you believe, a lot of these companies, airline, travel, rail, hospitality, can really capitalize on this? Is this something that you'd look at as a space?
Yes, we like the space, although unfortunately we don't have the airline stock which we used to have. But otherwise, yeah, this theme can run because there is this we don't have, at least in the hotel space, we can say that there is no return of the foreign visitor yet, both tourist and business, and that the Indian guys are now finding it difficult to get visas to Europe and all, and the people are irritated with that. And for whatever reason, of course, there are many places in India that people can visit. And therefore, overall big picture, this is also a thing about experience. You can see that in the, all these Coldplay and other things that people are willing to pay for experience these days. And it's a global thing again. I like things which globally are also working. So, we are not some odd man out, which is what I find in the auto particularly, that the world hates it, but some reason we like it. So I like the reinforcement that comes if these trends are generally happening. Like after COVID, the spending on homes, the spending on houses was not only an India issue, it was worldwide issue. It made, therefore, with consistency or consistent, this thing, it made it more for us to be willing to bet more, saying, this is happening everywhere, we can see it. It's the same thing with travel, tourism, experience kind of things that people are willing to spend and are spending big amounts. Yes.
Yes, spending big amounts and that experience, the need for those experiential, spends, etc., is definitely increasing as far as Indians are concerned as well. And talking about that, what about the retail sector? Because yesterday itself, we saw Trent make another fresh high. That stock has been, I think, a case study as to how you should not look at valuations when it comes to that. But what's the sense if you track Trent closely?
We don't have it.
Is that a bit of a FOMO feeling coming in?
Yeah, a little bit you can say, particularly because in Alliance Capital, when I left Alliance, Dinshaw was our consumer and retail analyst, and we used to own 9% of Trent in the funds. So 9%, of course, it was handed over to Birla Mutual Fund. God knows what they did with it. We were calculating a few days ago that alone would be worth $2 billion now or whatever. If somebody had kept them, but we left with 9% in Trent, and then in Helios we bought it for the first few years, and then felt, oh my God, it's gone up so much, and never had it. So it's very bad actually, but it's okay. We have had some other ones.
Yeah, but it's, I think, very difficult to make peace with the fact that something that you own 9% of, which is now.
But that was in a previous job, in a previous fund, so it's not the same thing, but still just to show how early. We used to also own, by the way, 5% Pantaloon at that time, because we used to like the idea, and that also first went up a lot, and then God knows what happened.
Yeah, we know what happened of that one, but thanks so much for making time and speaking with us, Samir. Always a pleasure to get all of those insights from you. So interesting one.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.